Hey, morning guys. Just a quick update on my views on the market this morning. So in the previous video I showed this trend line which I didn't have beforehand, but I added to my charts after our big reaction or the drop down on Saturday morning early. Another indicator or item that I added now to the chart is this is what we call the Corona lows. They're around March, 21st of March. So if I put a VWAP in from that low, we can see we actually reacted really well off there. So there was confluence there. It was the VWAP and this trend line that we bounced off of there, and there was a daily level there as well. But it's obviously very difficult to predict that in advance. I mean, that drop down there was very quick. That was like a 5-minute candle. Not really possible to react off of that. And I was up until 2 or 3 o'clock on the Saturday morning on that Friday night dump, which I thought was quite vicious. But then when I eventually fell asleep, then the big dump came at 5-6 o'clock on Saturday morning. Anyway, so that, but still keeping in mind that this trend line is on the logarithmic scale, which is used for longer term time frames. It just makes a bit more sense. But even looking at it on the normal scale, you can maybe just see this as a deviation. Just switch off that magnet, and also just a deviation, because there we had a perfect touch and a perfect touch and a near perfect touch. So I think that's we can use that trend line definitely. And then just zooming in a little bit, I just wanted to show my levels I'm looking at now. Go on the 4 hour, you can see the reactions better off the level. Alright, that's enough. So you can see the upper line, or I call it a key level, for obvious reasons there has been respected very well in between that move, can I say, in that consolidation that acted as a base or support, and then there again really well, obviously resistance there, support again there, support again there, just I think a week or two ago, really good support there. Okay, then I've got this middle key level, which you can also see for obvious reasons how well it's been respected there. There's some nice action, but more importantly recently, on, I think that was yesterday, on Monday, we had a really good reaction off of that level. And then the last key level, which I picked up from the all-time high in January, well respected there. There's been some good reaction. There was a little week down reaction there, and obviously now recently the basically stopped the momentum of this big dump down to the 40,000 levels. Okay, that's more. And then one other thing I wanted to add here is the CME gap is up here at 53,500. So that's the one thing I wanted to add. And the other item I wanted to add is if I pull a Fibonacci from the highs about 2 weeks ago, just before we dropped out of that zone down to here, the 618 level comes in at around there. So you can see I've set alerts for just before it and just after it, and then I have this key level and we have the CME gap there from Friday close, market close. So I suspect quite a reaction there, and that's why I've just placed a short position indicator here to remind me that we might have a reaction down there. So I don't think we're going to necessarily dump. I think we might just have a small reaction before we reclaim and go higher, but that's a very good day trade, and I'm interested in that. And if it doesn't happen and we actually go down to this level or even to that level, maybe reclaim that level and then go higher. But whatever happens, I obviously want to be ready for that. If we don't just turn around, then I am in a trade. We lose this key level, then I'm still in a trade. I'll definitely take profits on the way down, but leave a little bit open for the bottom. I don't think this is necessarily bad if we trade in the zone. If you zoom out a bit, you'll see this this move up was just too fast, and that's why once we broke that key level, there was some movement there. We stopped on that level and up again, but once we broke that level, we just dropped really fast through this zone there because there was nothing there. So that's why it's important that we spend some time here, even go down, because I think it'll make Bitcoin even stronger and more bullish if we actually retest this level and retest this level and then go up. Just my views on the market now, and just want to go to Ethereum, the Ethereum BTC pair, because I think this is significant for the future of the altcoins, short-term future, the next month or two. So that the yellow line was is a key level, according to many analysts, and then I decided to mark that high that we had there as a key level. I want you can see my alert is set on that key level, so we broke the yellow. The prediction was once we break this weekly yellow level, we might be able to run up, but that wasn't as straightforward. And that key level seemed to be quite significant. You see, if I zoom into the 4 hour, you see we first got rejected off the weekly level. We tested it again, rejected, and then the VWAP acted as support, and then we went up, and then we got rejected by that key level, which was that a previous local high. Then we came back down through the weekly. We retested it again yesterday evening or late afternoon, and then through the night we pushed through, but it rejected us once again, and now we find ourselves under the VWAP. So I'm really looking for Ethereum to go through, reclaim that on a 4 hour. So close on the 4 hour, close a candle above there, come down, actually test it and show that it's powerful, that it's reclaimed that level, and then we can go back to the Ethereum chart, because I think Ethereum has really reacted much better than Bitcoin. If you just look at that 4 hour chart, how well Ethereum has recovered. It's nearly back at all-time highs. So I really would want to get into a trade with Ethereum once I see strength or a reclaim of that key level against Bitcoin. So always good with the altcoins to check the BTC pair, how it's performing. It shows strength there, then you can go. Maybe just ending off. I saw I'm in a dot trade here, .USD trade. So I just want to share my thoughts on how I got into that. So this wasn't completely my own idea. This was on a very high time frame, or very high from July last year. That low up to the all-time high of dot now in November. If you pull the Fibonacci, you get to this level, and remember this is on the .BTC pair. I haven't got a trade on. I just put the trade in there to see how compare the two, how they react. So I actually traded off the .USD pair, and then if I do the same Fibonacci also from July, they both correspond. So dot against BTC and dot against USD, and then according to that I decided to get into a trade. I took off the trade size because I'm still feeling a bit vulnerable after this big drop we had. I obviously lost some dollar value in that trade. I wasn't in a specific trade, but I got stopped out of a few altcoin trades. 2 in profit and 1 I made a small loss on. But anyway, this dot trade seems like Polkadot trade seems like it's going well so far. I'm still gonna leave my stop loss. That's at about 20%, and my first take profit will be just before that, because I think that's a key level there. So I'm gonna close off my position there, and then I'll leave the half open. I might take another 25% there, but I'll just see the strength of specifically the .BTC pair before I close anything. But I'll definitely close half of the position at this first resistance. It's important to take profit. Right, that's it for today. Talk to you soon.